Holy smokers, folks. It's no jokers. You wake up, you thank the Lord for the day. You go on X, and what do you see? Trump's daily press conference every day, man. Every day. They got to be talking. Trump said this, Trump said that. Oh my gosh, all this stuff, right? Here we are. It's another time period. NVIDIA's reporting earnings this week. Oh my gosh. Everybody's talking about it. Is NVIDIA stock going to crash the market? The same fear that they have quarter in and quarter out. Is NVIDIA going to do it? Is NVIDIA going to crash the market? It's like waking up every day, like wondering if you're going to die, like, looking at your casket, like maybe I'm going to die today. Like, oh my gosh, man. Every time NVIDIA reports earnings, I'm always worried, is this going to be the crash? Which, by the way, speaking about death, I think I had the best idea. I think I'm the first person in the human history to think of this. You guys ever heard of the destination weddings? You know, people go to a destination to get married. I thought about this concept of a destination funeral. Like, would that not be the coolest thing? Like a destination funeral? Imagine balling out like that and everybody just like has the grandest time and like a destination funeral. I don't know. I think I came up with a new industry, okay? Alrighty, guys, 3 core subjects we're going to speak about in today's video, okay? First off, I mean, funerals are depressing, are they not? Like, I remember being a kid going to my grandparents' funerals. Like, everybody's crying. It's so sad. I'm like, why not? Like, let's have a party, man. Let's celebrate life. Like, let's do it the right way, right? I don't know, man. I might be onto something here, okay? All right, guys, 3 core subjects we're going to speak about in today's video. First up here, position I sold out of 100% today. Why did I do it? We'll get into that. Some big commentary around that, okay? 2, NVIDIA. Is NVIDIA going to crash the market this time around? We've all been waiting. We're all looking at the casket. Maybe today's the day. Maybe this is going to be the week. NVIDIA crashes the market, right? We'll speak about that subject in this video here today. I'll tell you if it's going to crash the market or not, okay? Third subject we'll speak about here today is a stock I want to buy more of. And we'll talk about how much upside is ahead for this particular stock. We're actually going to talk about 2 stocks I want to buy more of and how much upside is ahead for those stocks. One thing and one thing only I need from you guys. If you could please just smash that like button, that would make the day for me, okay? That's all I need from you guys. If I could get, like, please just hit the like button. Like, that's all I need, man. I don't, like, if you want to subscribe to the channel, you can certainly subscribe. We're at like 880,000 subscribers, but all I need you to do, your one job is just to hit that like button. And I hope you can do that one job for me. I appreciate that, okay? Listen, okay? We are 1 week away from a big sale I'm going to have for my highest end Patreon tier, okay? It's going to be on Labor Day, September 1st. It's exactly a week from today, okay? And that tier is usually $125. We're going to do it for $49. It is a smoking deal. So if you want access to this deal, the pinned comment down there, click on that, enter in your name, enter in your email or phone number, depending if you want the deal sent to you via text or via email, okay? Some people like email, some people like text, however you want, okay? This will be for my #1 stock market course ever, which has become Master Stock Market. You also will get access to see the stocks I'm buying and selling each week in the Patreon portfolio and access to that Discord chat. This is not my private stock group. So don't get this confused with my private stock group. This is what you get access to when you're part of my private stock group. This is what you get access to as part of this Patreon sale. They're very, very different, okay? The Patreon's phenomenal. It's like having a home gym. Like, the Patreon's like having a home gym. Like, it's good. You can get a good workout in. You know, it's valuable. But the private group is like you having like NFL, like weight room, okay? There's just different calibers. There's just different, you know, things in regards to that, okay? There's, you know, the Patreon's great. It's like having that home gym. You know, the private group, that's like, you know, freaking like you got an NFL like serious situation going on, okay? Okay, listen up here, folks. First off, I want to talk about this, okay? What I'm showing you right now in front of you, it's very important we discuss this subject. These are my annualized returns in the public account over the past 5 years, 3 years, 1 year, year to date, 3 months, and 1 month. This is all calculated by Fidelity Investments, not by me in some spreadsheet and throwing numbers around. This is calculated by Fidelity Investments, okay? My 5-year return on average per year has been 23.4%. That's time-weighted return. If we go money-weighted return, 24.8%. per year over the last 5 years, which means we're averaging well over 20% a year, which puts you in a pretty, impressive group there, right? The S&P 500 has been no slouch. The S&P 500 has done very well the past 5 years. The S&P 500 has averaged 15% over the past 5 years per year. So that's a pretty good return for the S&P 500. We've just outdid it, right? Now, if you compare that to bonds, for instance, right? Bonds has given you a negative return per year for the last 5 years. So listen, folks. Bonds sometimes people view bonds as this really safe play. And I remember when I first got in this financial markets, like people would view bonds as like a safe place to put money. And it's like so safe for your money. Bonds come with risk as well. Think about how much inflation we've experienced in this world the last 5 years. And imagine getting a negative return per year over the last 5 years. It's devastating. You want to talk about risk? Have everything in the world get 30, 40, 50, 60, 70, 80% more expensive, depending upon what category it is, and you lose money. So bonds, the important thing everybody understands about bonds is they're not as safe as a lot of people crack them up to be. And when I got in the financial markets back in 08, 09, people talked about bonds like it was just the greatest thing ever, like it was just so safe, this and that, right? I think a lot of minds have been changed over this past 5 years, and people are starting to see the risk. Because everybody knows about the risk in the stock market. Everybody's heard about the Great Depression stock market crash. Everybody heard about the Great Financial Crisis when all the stock market indexes fell 50% plus, peak to trough, right? Everybody knows about when Rona came and the stock market had the fastest stock market crash in history. We all know about these stories. People don't know about the risk in the bond market. And they just hear about it and they think, oh, this is great. This is such a safe place. And it's like, dude, no, that's devastating. You're a retiree and you've got all your money in bonds the last 5 years. That's a catastrophic L there, right? No, the 1 year return for the public accounts is ridiculous. Time weighted return, Fidelity has us at 70+%. Money weighted return over 71% versus S&P 500 16%. So we've definitely, let's just call it leveled up a bit, over this past year, right? Now I'm showing you right now in front of you my P&L for the public account. What do we see? We haven't taken an L the whole year. What an incredible year. And that goes for like hedges, so like put options I had in the market. That goes for long positions. It's been incredible. Total gain taken this year, $667,000. Of that long-term gain, $613,000. Of that short-term gains, $54,000. Now, a lot of people have been asking me, what am I going to do? The tax man, he's going to be coming for me. Tax man's going to be coming. This is a whole lot of profits. Now, this is only one portfolio. This is just a public account that I've been building since, 2017, 2018, when I started that in the private stock group, right? And everybody in the private stock group has been able to see every single stock I've sold and bought over the years in my private group, right? Listen, what am I going to do? I'm going to pay my taxes. Like, it is what it is. Like, that's the cost of doing business. I don't know what else to tell you. It's no different than, you get an NFL contract and, you get paid $30 million a year and it's like, oh, what are you going to do? Tax man's coming for you. You're going to have to pay like $6 million a year or $8 million a year, whatever, to the tax man. Okay, we'll pay it. Like, it just is what it is. That's part of doing business. You know what I mean? Didn't Drizzy say in that song back in the day on Take Care? Nowadays, 6 figures when they tax me? Like, it's just, that's part of business, man. You know what I mean? Like, it is what it is. Well, what am I going to do? I'm going to pay taxes. Okay. It's just, that's part of the process. Now, in terms of what I sold out of completely here today, it was Little Dingo, Duolingo. Okay, Duolingo, I decided to go ahead and cash it today. So, not bad. 37,000, let's call it right around $38,000 was my cost basis there. Ended up taking proceeds of over $57,000. That gives me a short-term gain of over $19,000, which isn't fun, right? I'll have to pay taxes on that. So we can say the actual gain on that might be, after taxes, $14,000 or so, right? Because I got to pay federal taxes, or maybe $13,000, maybe $12,000, let's say, somewhere around there, between $12,000 and $14,000. The good news is I live in Nevada, so we don't have state income tax here, right? The Strip pays for that. Thank you very much. And so, that just is what it is. Like, once again, cost of doing business. You want to make a lot of money in this world, you're going to pay a lot of taxes. Part of the process, baby, okay? It's a cost of doing business. So, Duolingo, like, what happened here? Why did I decide to do it, right? I woke up today, Duolingo down again. So I'm looking at my Duolingo position. I have over a 46% gain. This is a position I bought last week. So I'm looking and I'm like, oh my gosh, I'm approaching a 50% gain on this position. And I just bought this last week. I'm like, this is looking pretty attractive. And remember, these puts expire March 20th, 2026, right? 260. So now, let's say I held these all the way to expiration. To make the same amount of money, I would need the stock come March 20th, 2026, right? To be, where would that be? $232, right? To make the same amount of money. That's a lot of downside from here. Now, that is very possible Duolingo goes down to 232 or maybe even below that. But do I want to take that risk, right? Now, that's what it comes down to in regards to the situation. So I said, peace out, I'm out. And I took my profit, right? Which, got filled at 28.54. So I made like, around 50% roughly on this, in literally like a week. It's incredible. Like, it's not always going to happen like that, right? But that is absolutely incredible. And so this was a rare opportunity. And for me to hedge my portfolio, I wasn't planning on cashing it this soon, but given the stock, how much downside that stock is just seeing time and time again, like it's not looking good. And so I'm like 50% in like a week. And that's where it comes with, you have to figure out more profits or greed, right? Because it's very possible Duolingo keeps going down. And I'm going to show you in a moment the case to be made that Duolingo keeps going down, right? And it's very possible that suddenly those put options could end up being worth, instead of $28.54 like I sold them today, they could end up being worth $35, $40, maybe even $50 within a few weeks or a few months from now, right? But I have to weigh, like, what if I'm wrong? That's always a situation. And you're under a time constraint with put options. With a long position, it's so much easier. I go long a stock, right? I make an investment, which is what I focus on 99% of the time. Make an investment into a company. It goes lower, whatever. I buy more shares. As long as I still love that company just as much, the fundamentals haven't changed. Put options is different. This is under a time constraint. If Duolingo, let's say, reverses this week, next week, and the next few weeks, and starts going up again, now I'm stuck in this position. I start losing my profits, right? Let's say Duolingo keeps going up. And maybe even I'm right on my thesis about Duolingo, but let's say the stock is just going wild again, right? It catches momentum. I don't know. They announce some good news and everybody gets hyped about Duolingo, little dingo again, and everybody's, oh my gosh. And everybody talking about it on X and YouTube and everything. Oh my gosh. And suddenly Duolingo's $400. Then I'll have lost all my profits. I'll be down an immense amount, right? And I'm stuck in a situation then where I'm like, oh gosh, this hedge has really turned south. And then I'm kind of waiting. And then maybe it doesn't go down by March. And I'm like, I had a chance to take 50% in a week. I kind of got to take that, man. And so, that's where you have to weigh like greed versus more profits. No, there's a case to be made that Duolingo could keep dropping significantly from here. And I might have cashed way too early. And by the way, I'm perfectly fine with that. Like I'm never going to sell the top on a stock. I'm never going to sell the low on a stock. Like it's, impossible to get the perfect price, right? So if I did sell too early and suddenly those put options are worth $35, $40, in a week or two, it's all good. But here's the deal with Duolingo, okay? And here's a case to be made that it could keep going lower. What I pulled up in front of you right here, if I recall, this is a 3-month chart. I think it's either 3-month or 6-month chart. I think it's 3-month, okay? Now, what do you find? Duolingo's gone down almost 40% in the past 3 months, right? While the Qs are up 10%, the S&P 500 is up 9.6%, right? Imagine if the market got hit. Imagine if the Qs start getting hit, the S&P 500 starts getting hit, right? There starts to be some real weakness in the market, some real risk-off activity. Where do you think Duolingo is going in that situation? It's going with a 2 in front of it. If the Qs start falling, let's say nvidia comes out, and we'll talk about nvidia later in the video and if that's going to drop the market, but let's say hypothetically they come out, it drops the market, a lot less momentum, people get caught up into whatever Trump's saying again, right? Fear start around this or that. All of a sudden you get a little bit of fear cycle in there, right? Fear about maybe the Powell's not going to cut, or if he does cut, like it's going to raise rates or whatever, right? The 10-year is going to pop. Okay, all of a sudden fear comes in the market. You could see Duolingo with a 2 in front of it in no time, if that were to happen. And when I say no time, I'm talking within the next couple of weeks, right? And so then I'll be looking and I'm like, dang, should probably held those a little bit longer, like could have made even more profit. But there's, once again, the case to be made that maybe eventually it reverses course. But this isn't looking good for Duolingo. Like, this stock cannot catch a break. Like, any pop this stock sees, it gets sold right off. And that's been way before I even got into this hedge position, right? You can see every time the stock tries to recover, there's just sellers there to sell right away, which shows there's a big lack of confidence in this company. And there is a view that, the peak for this company is in 2025 when it comes to, stock price. And so, you don't get a stock this week, 40% roughly down in 3 months with the Qs up 10%. You don't get it that week without there being true, real fears of the fundamentals of this company deteriorating. That is an insane move down for a stock price in such a fast amount of time. With the stock market being that strong, I'm not the only one that's like worried about that company's fundamentals, right? Now this puts me at available cash in the portfolio essentially at $156,000, right? I had margin buying power at $2 million, but you guys know I don't use margin because it's too risky, it's too much stress, it's too much everything. Interest you have to pay, it's a bunch of crap, okay? But I have $156,000 just chilling in the public account now at this point in time, which, guess what? This puts me in an amazing position. If we have, remember I've talked about this a lot of times this year. This year reminds me a lot of 2018, right? A lot of 2018. I'm in such a great position if a 2018 scenario plays out, okay? In 2018, we had a melt up in the market that lasted all the way until the first week of October. And from there, down all the way to Chinatown. It was a meltdown in the market, okay? It got nasty really quickly. If that does play out, whether that's as severe as it was in 2018 or let's call it a mini 2018, I'm ready. I got the cash ready. $156,000 chilling in the public account. Let's say this doesn't happen. Let's say the market just continues to melt higher and higher and higher. NVIDIA earnings come out. They're great. A lot of excitement. AMD starts to move huge again up to the upside, right? The semiconductor space, great feelings around tech. That's fine as well, right? Now, we could have both those situations play out. We could have a melt up all the way till October, right? We're only, late August? We're not even to Labor Day yet, because of Patreon sales on Labor Day, right? We could have a melt up, and then we could have a meltdown, right? And so whatever situation happens here, I'm looking great. Like, market melts up, I'll make so much money. Market melts down, I'm ready to buy. I got a whole lot of money ready to buy. So I really like the position I'm in at this point in time, right? No, I sold that Duolingo put options off, and I went in the pool. I had the pool heated. It was 87 degrees. It was gorgeous in there. I was just swimming by myself, and I was thinking about, man, that was nice. Made $19,000 in a week, right? But here's the thing you got to understand about this, because I know some of you guys see this, and you're like, dang, man, I want to live that life, man. That's the freaking life. Like, made $19,000 in a week, go in the pool, swimming around on a Monday afternoon. What a life. This has been 17 years in the making. 17 years in the making. If you think you're just going to wake up and be like, make $19,000 in a week on some put options, it doesn't work like that. I've been doing this game 17 years. I've sacrificed more than you could ever imagine. The amount of parties I sacrificed when I was a teenager, when I was in my 20s, the amount of times I could have gone out, did this or that, the amount of experiences I said no to, the amount of people I said no to, that I invite me to this and invite me to that. No, because I'd make up whatever excuse, but really it was because I needed to listen to conference calls or I wanted to save the money to invest more or whatever, right? 17 years. So a lot of people think you're just going to wake up and you're just going to be making all this money and you're going to be swimming in your pool on a Monday afternoon, driving Ferraris, living in mansions, and it's just going to be the life. No. No. You have to sacrifice so much to get to that place. You have to even work on vacations. I mean, I can't, even when I go on vacation, if I go on an unplanned vacation, I'm going to be honest with you, I still secretly work. You have to sacrifice so much. I remember the days, even when I worked at Quick Trip, when I'd clock out and it was time for vacation. I was taking 3 days off, 5 days off, whatever, right? And it was the best feeling. I'm done. I'm not thinking about work. I don't care about work. No one's going to bother me. I'm always thinking about work. It's just different nowadays, right? So 17 years in the making, and the same thing with all these gains. You see me make thousands of percent on Tesla, thousands of percent on Palantir, thousands of percent on Elf. All these stocks I made hundreds of thousands of dollars on. 17 years in the making. It doesn't just like magically happen, right? And I create things like the Patreon and the private group to help accelerate you guys with your learning, because I had to learn all this stuff. Like, I didn't have somebody to like hold my hand and be like, here's how to properly value a stock. Here's a great software for you to use. I didn't have somebody to help me with that. And I got these things to hopefully accelerate you guys. But it's 17 years in the making. All these gains, the public accounts performance, 17 years in the making. It doesn't just magically happen, right? We've been able to grow the public account from, what was it? We started that portfolio, I think it was either 2017 or 2018. I think it was 2017, if I recall. I started that portfolio, right? Could have been 2018. One of those 2 years I started the public account, right? And now the portfolio is nearly $4 million. And it's like, wow, made so much money so quickly, right? 17 years in the making, 17 years in the making, right? No, this really, I got to speak about this. This is an important subject, right? Because some people like to put other people down, right? And I saw this on X here today, somebody trying to put down Joseph Carlson, right? In regards to Duolingo. And I liked his post in regards to this, right? I have a problem. I understand some people want to talk trash and those sorts of things, right? But I have a major problem with, there is a certain amount of people that want to see other people fail. I can't even get into that mentality. It's such a weird mentality. Like, if Joseph Carlson, if Johnny over here, if they don't make money, what does that mean to me? Nothing, right? Like, everybody watching this video right now, I want every single person to win. I want every single person watching this video right now to make money. I'll never understand this concept that people talk trash, they root against people, right? Because I'm just like, what is the purpose of that? If people do bad, right, financially, you're rooting against people financially, they can't then go buy your products and services and your company's products and services. It's some real weirdo activity, in my opinion. I want everybody to do great. I want every person watching this video to be in a way better financial situation a year from now, 2 years from now, 3 years from now than they are today. I don't care what your personality is. I don't care what you look like. If you're male, female, right? Which you prefer. I don't care what your skin color is. I don't care about any of that. I want everybody to do better. I want you to be in a way better financial situation than you're in right now. If you've got $1 million net worth, I would love to see your net worth at $2 million, $3 million, $5 million a few years from now. If you got $1,000 to your name, I hope you have a whole lot more than $1,000 to your name 6 months from now, a year from now, 2 years from now. I get no benefit out of somebody doing bad. But you know what I get a lot of benefit of? People doing well. People making money. Because if somebody goes out there and you make a lot of money, guess what? You might be able to join my private stock group. You might be able to buy 1000X from me. You might be able to go buy yourself a new pair of Nikes and support one of my companies. You might buy something on an ad you saw on Instagram or Facebook. So Facebook makes money or Instagram makes money. You might be able to go out to the restaurant, treat your family at Cheesecake Factory tonight and support one of my companies or North Italia, right? That's the goal. Like, if you're doing bad financially, you can't do these things. So I hate this, when people trash talk, kind of root down on people. It's so weird. And I see it all the time. I see it on YouTube. People actively will root against me. It's a small percentage of people, right? A lot of people root for me, and I'm thankful you guys root for me. But there's plenty of people out there that root against me. They want to see me do bad. They want to see my stocks fail. I buy a new stock, they hope it goes down. It's weirdo activity, man. Weirdo activity. The creepiest of the creepy people, right? My gosh. And I think you really begin to realize this when you start your own business, right? Because until you made your own money, it doesn't hit you like that, right? And, when I started my real estate marketing company, right? Which I think I'm much better looking now than when I started my real estate marketing company 10 years ago. But when I started my real estate marketing company, I had one child at that time, right? Living in a 3-bedroom apartment. This picture was actually taken just outside the apartment there. And my customers were realtors. I wanted all my realtors, my agents to all be doing good. Because if they were doing good financially, then they were much more likely to go ahead and book me for jobs. Like if you're an agent, you can't get any like homes, right? Well, like how are you going to book me for a job? I wanted the real estate market to do well, because if the real estate market's doing well, people are moving. There's a lot more listings coming up. I'll be able to do more pictures, more videos. I want all my realtors, agents to do phenomenal, because then they'll book me for like community tours and like some of those the high-end drone projects and things I used to do back in the day. Phenomenal. If they're doing bad, that means I'm doing bad. That means less food on for my kids to eat, right? That means a worse financial situation. That means we're going to be in that 3-bedroom apartment forever. But since a customer's doing well, I help them do well, right? I got to make money. I got to prosper. I got to, start my YouTube channel and do that. And boom, 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 we keep going. And I also realized this even when I was a kid, because we lived in, a very rough area. Let's just call it that, a very rough area. And my dad started his pool cleaning business, cleaning pools, doing service on pools, right? Out in the retirement community, out in Sun City, West Arizona. And we were able, he was able to build that, and I would work with him all summer. As soon as school would get out, I'd go to work with him every day. We were in 110 degrees, we'd go clean pools, right, and do service work and things like that. And through that, we were able to get out of that really rough area and move to a middle-class neighborhood, which was a lot better, right? Didn't have to worry about if you leave your bike outside accidentally being gone the next day, or your toolbox is going to be gone, right? And it's just like, it was nice. So until you start making your own money, sometimes people don't realize it. You think money just grows on trees. And then you become an entrepreneur, you start making your own money, and you really like starts to hit you and like, dang, like I want everybody to do well. If everybody does worse, I do worse. If everybody does better, I do better. And it's a great feeling, right? And so you don't actively root against people, you root for people. If I had it my way, I hope Joseph makes a ton of money on Duolingo stock, right? I already made my money and moved on, which, by the way, I might re-hedge against Duolingo down the road, which that could be weeks from now, months from now, so do keep that in mind. But the moral of the story is I hope he makes a ton of money. I hope everybody makes money. The bottom line is the stock market is not a zero-sum game. It's not one person wins, one person loses. It doesn't work like that. It might sound cool to pitch it like that, but it doesn't work like that in reality when you actually run the math behind it. And so I hope everybody makes money, man. I get no benefit from rooting against people. And so I'm coming up with this new term, this new acronym here, okay? It's called Mr. APWA. Mr. APWA, make rooting against people weirdo activity. Make rooting against people weirdo activity once and for all, because it's just ridiculous, man. We can't do that. We got to root for people. Let's support each other, and all those sorts of things, okay? Alrighty, next up here, let's get in this next subject. NVIDIA, will it crash the market? And then we'll get into some stocks I want to buy, how much upsides for those stocks, okay? So here's the deal with NVIDIA. We just got a new excitement cycle for NVIDIA. They got this new robot brain, which is coming out, which is going to go on sale for $3,499. This is exciting, right? Now, the thing you got to understand about this robot brain is this matters about zero for NVIDIA the next 12 months. Like, if you think all of a sudden, 12 months from now, we're going to have robots all over the place with these robot brains in them from NVIDIA, and they're going to be making, tens of billions of dollars from this, and it's going to be so meaningful to their business. No, it's just not happening. But 12 years from now, it's a whole different ballgame. When it comes to these exciting cycles, a lot of times it's not about what is happening for the company short term, right? Which this isn't going to be meaningful at all for NVIDIA's business in the short term, but it could be very meaningful for business for the NVIDIA long term, right? 5 years from now, 10 years from now, 15 years from now. And so this is a step in the right direction. So there's new kind of excitement around NVIDIA in regards to this. People are going to be like excited about that. So that's definitely going to help the stock, regardless of what happens, because people lean back on something like this and say, why do I want to sell? They got this new robot brain. They're going to be they're going to be the brains behind all these robots in the future, right? And so that's just something to kind of keep in mind. Now, in regards to the stock, could it crash the market, the fundamentals, right? Here's the thing with NVIDIA. The issue with NVIDIA is not this quarter they're about to report, or even next quarter. If those are the issues, and NVIDIA's got bigger issues, but I don't see those as the issue. I don't see this quarter they're about to report as an issue. I don't see next quarter being an issue either, okay? Once again, if they are, then we got some actual issues, okay? The maybe issue we're going to have would be in their January quarter, okay? Because analysts are pushing close to 50% growth expected that quarter. I think that's going to be a really tough quarter to hit. So I don't think they're going to talk anything about that quarter yet. They're probably just going to focus on last quarter and the upcoming quarter. But that might be an issue down the road. And then these quarters here, you might have, those are going to be tough numbers to hit as well. 38% revenue growth, 37%, 25%. Analysts might need to bring down those numbers. So NVIDIA could end up being a problem. I'm just not 100% convinced it's right now in regards to like crashing the whole market. Now, let's say NVIDIA does have an issue with some of their revenue. Does this crash the market? The answer is no. Why would it crash the market? It would hurt the semiconductor space. It would hurt the Qs. Like, let's say NVIDIA goes down 10% on earnings, right? It's going to hit the Qs hard that day. Is it going to crash the whole market? No. Because NVIDIA is a one-off standalone company that's just benefiting massively from other massive tech companies spending a fortune. If those companies like lighten up their buys a little bit, then people will say, oh, that's more money Meta can use on buybacks or dividend raises. Same thing with Google, Microsoft, all these companies. So, you could always flip it and like, oh, it's actually a positive for all these other companies that are also massive weights in the index, right? You could also say, okay, maybe these big tech companies are going to spend a little bit less with NVIDIA, a little more with AMD over the next few years. So then AMD stock continues to rocket higher during that particular time, and maybe NVIDIA is a little weaker. But will NVIDIA crash the whole stock market? No, it doesn't work like that. So, because it's a whole different phenomenon in regards to what's going on with NVIDIA right now. So, but, I think there are risks involved with NVIDIA. They're just not like, if NVIDIA was trading at like 100 forward P right now, I'd feel very different, but it's not. It's just not, okay? Now, next up here, let's talk about some stocks I want to buy more of and how much upside is ahead for these stocks, okay? First one of these two is this one. Google McDougal. Now, the thing with Google McDougal is I bought these shares in the public count April 23rd, 2025. It was 444 shares, average cost $156.90. Already up 33+% on these shares, right? Such an easy money buy it was in April. Like such an easy money buy. But the thing you've got to understand about Google is it's still an easy money buy. People have disrespected Google immensely over the past year. You would have thought this company is like OpenAI deleted them. Like, oh, I still use Google as much, if not more, than I've ever used it. No, maybe there's some people that are like, no, I don't use Google search anymore. I use ChatGPT. Cool. I still use it just as much as I've ever used it, if not more, right? YouTube. Has my YouTube been altered in any respect in terms of me like using YouTube yet less because of ChatGPT came out or AI? No. I use YouTube just as much as I ever have, if not more so. I'm sure a lot of you guys can attest to that as well. You probably do as well, right? Has AI made everybody say, I don't want Android anymore? I'm getting rid of my Android device. No, doesn't look like that. Android market share looks better than it's ever been, right? His AI collapsed their cloud business anyway? No, the cloud business looks phenomenal. YouTube TV, did it collapse YouTube TV AI? No. YouTube TV's number one biggest player out there, right? You just go through this. You can just keep going through, and you're like, this AI thing is like, and Gemini continues to actually be very impressive. So this like notion about like Google's doomed, oh my gosh, like it's just a false notion in my opinion. It's very disrespectful and not on a very educated level to understand where Google's actually at as a company. Is ChatGPT and other products, can they be in some ways a threat to Google? Sure, some ways, but there's a lot of other ways they're not. And so, and this whole AI boom, it's going to likely end up making Google more money than costing them money in the end. So, I think the death of Google has been greatly exaggerated, right? Now, there's also the worries about the current administration being anti-Google and things like that. And that is what it is, but that's why these big companies have incredible law firms behind them, right? Now, here's the other thing you got to understand about Google and why it's still a great buy right now. The forward P's 20 on this stock. And keep in mind, Google many times comes in and beats their numbers. So you see it at 20, it might end up actually being lower than 20. But with all the growth Google has, you can make a case that it's one of the safest companies you can invest in the entire stock market. When you look at their cash flow statement, their income statement, their balance sheet, and their growth rates, you could make an argument that it's one of the safest companies in the entire stock market to invest in. And it trades at a forward P of 20. Still a buy. Still a buy. Stock number 2 of these stocks, I still want to buy more of this stock, but it just keeps going up so fast. It's a tough one. And that is SoFi. Mr. Limitless, I call it. Up another 4.5 percentage points here today. We're now up 214% on the stock in the public account. Cost basis of $830, 5,000 shares I own. I want more. This is just such a limitless stock, and it's just like, it's tough though. The thing with SoFi is, and the reason it's limitless is you look at the growth rates are just ridiculous. Like, what was last quarter? Like 40% plus revenue growth, right? And you just think about how big this company could become in the next 5-10 years, right? They've got to make it through the recessions, as I always speak to you guys about in regards to SoFi. They got to make it out to the other side. They will face recessions. And as somebody in the financial space, of banking related, fintech, the biggest thing is make it through those recessions, out to the other side, and then you just absolutely dominate. When you get through that recession, there's so much money to be made. That's what SoFi just has to do. And if they can do that, it's Mr. Limitless. There's just so much growth in this company, and the way Anthony Noto's running the business is incredible. And so, SoFi is a hard one to even say where the top is. Because the bottom line is with SoFi, if Anthony Noto can pull this one off, this could become a JP Morgan-ish type company a decade out. It can become a Wells Fargo, Bank of America type company a decade out. A giant in the financial space. Not like a little niche player like they would be viewed kind of nowadays, right? No, a giant, a banking juggernaut. Like where they start to make and have so much money that, they can start plastering their name all over skyscrapers in New York City if they want, okay? That sort of money, JP Morgan type money, Wells Fargo type money, Bank of America type money, Citi type money. That's the type of money we're talking about. So that's why I call it Mr. Limitless. It's a hard stock to value short term because the growth is so explosive. Very tough stock to, and also when you look at how much their profitability should skyrocket over the next few years, it's a very tough stock to value. So you could be looking at it at 26 and be like, man, it's a ripoff. And that's fair. I think there's a strong case to be made that 26 is not a good price for SoFi. But you could also look at it and say, SoFi at 26 is a great deal because this is going to be a $50 to $100 stock very shortly, right? So I think there's strong arguments to be made either way. And it's conflicting for me because I'm up so much in the position. I'm like, do I really want to go buy more shares of a stock I'm up 200+% on? I kind of do, but I'm like, I don't know. That's up so, it's one thing to buy a stock when you're up 20% on it. Do you buy more shares when you're up over 200%? And it's not like this is like a position I've had for years and years and years. I've been holding the stock for 10 years and I made 200%. No. This is a stock I built into a big position really in the past 24 months. And so to make that much that quickly, tough. But I kind of secretly do want to buy more shares. We'll see what happens, okay? Appreciate y'all joining me as always. 6 days away from the big Labor Day sale, September 1st for my highest end Patreon tier. It's going to be $49 for that particular day. It's usually $125. If you want to access that, pin comment down there, click on that, put in your name, your email, and your phone number if you want to receive it via text or via email, and we'll send that over when it drops. It's going to be pretty darn exciting. Much love and have a great day.